Hi, welcome back to my channel. I'm Missy Renee, and today is another Financial Friday. As you all may know, April is Financial Awareness and Financial Literacy Month. So in honor of that, I am using my over a decade worth of experience to go over some financial aspects with you all in the short segment that I am calling Financial Fridays. Hence, it's happening every Friday for the month of April. So if you're just now joining, last week was my first video for Financial Friday. Today is video 2, so we're just going to be building off of what we went over last week. Grab your pen, grab your paper. It is going to be filled with like definitions and just some valuable information. Now, keep in mind, all this information is just covering the basics of financial literacy. If there's something that you want to see and you need more specific information about, feel free to drop a comment below and let me know, and I'll be more than willing to help you with that. So without further ado, let's go ahead and hop into this. It's a financial institution. A financial institution, or a banking institution as they're also known, is a business entity that provides services as an intermediary for different monetary transactions. For the purposes of this video, we are going to be focusing on banks and credit unions. A bank is a financial institution that operates under federal and state laws. Banks provide and offer numerous financial services. A credit union is going to be a not-for-profit financial institution owned by people who have something in common. Credit unions offer the same services as banks and operate under state and federal laws. You have to become a member of the credit union to keep your money there. What does it mean to be a member of a credit union? Typically, to join a credit union, you have to meet some qualifications. One of the biggest qualifications is going to be just being located in the same area as the credit union, so within like a certain metro area. Or for instance, like Navy Federal is a really popular credit union. You have to be a service member or be directly related to a service member to even be considered for that credit union. So those are going to be just some of the things that we say when we say you have to be a member of a credit union. You just have to meet certain qualifications. Another qualification that a lot of credit unions use are going to be based around your credit score. Now, the credit unions that actually do that, to my knowledge, they do typically have programs where if you don't meet the credit requirement, they do help you build your credit. You can take like a credit recourse class or things like that. Or you just have to leave a certain amount of money on hold with the credit union. Another difference between a credit union and a bank is going to be how you qualify, of course. So with credit unions, you typically have to meet that credit score and or be in a certain area geographically to qualify as a member, whereas with a bank, typically you can apply for any bank. You just have to pass ChexSystems, which is a system that pretty much goes in and it checks your record for how many open bank accounts that you haven't paid off. So if you overdrafted a bunch of times with another bank and you're trying to find a new bank because they won't cash your check or anything anymore, typically you won't pass ChexSystems doing that. Or if you had a lot of fraud or you are known to fraud different financial institutions, then you won't necessarily pass ChexSystems. And there's a whole other list of items that you can do to pass or fail ChexSystems. If that's something that you all are interested in knowing, please leave a comment below and I will go more into detail on that as well. Piece of just unsolicited information from me. I have worked for both a credit union and bank in the past. I currently work for a bank now. It is one of the top 10 largest banks in America, actually. But I do still do all my personal banking for the most part with a credit union. I personally prefer credit unions just because they are smaller. You have more of a one-on-one approach with them. And one of the biggest benefits to a credit union is, like I said, they're not for profit. That doesn't mean that they don't make a profit. That just means that they're not out to gain a profit. So with that being said, most of the money that they make or that they profit outside of paying their employees and all their bills and things like that, it typically goes back to the members. So my personal credit union, every January, they have what is called profit payout. So all the profit that they have, they pay back out to their members. Now, in order to get this payout, you do have to meet certain qualifications typically, but usually it's like having an active savings and checking account with them, maybe a loan of some sort. Now, I will say that I don't have like a lot of loans or anything, and I don't have like a ginormous savings and checking account. So my profit payout is pretty minuscule compared to some others who are getting back hundreds or thousands of dollars. I typically get around like $15, $20 back savings. Some products that are offered for the basis of this video are going to be savings accounts, checking accounts, and different types of loans. Savings accounts are a deposit account that earns interest, but typically limits the amount of withdrawals you can make from your savings account. Some examples of some savings accounts are savings accounts, money market accounts, and certificates of deposits, also known as CDs. Interest is going to be the amount of money financial institutions pay you for keeping your money with them. Interest is expressed as a percentage, and it is calculated based on time and the amount of money in your account. Compounding or compounding interest is going to be how your money can grow when you keep it in a financial institution that pays interest. APY, or annual percentage yield, reflects the interest that you earn on a yearly basis. Compounding interest over time. The reason we don't just keep our money under our mattress or in a shoe case in our closet is because that doesn't necessarily earn you any interest, and the potential of it being lost or stolen or burned up in a fire is significant, even if you have a fireproof safe. So the graph below is going to be showing, it shows over 5 years and 10 years, if you were to keep your money in a mattress or in a closet or whatever the case may be, how much interest you're going to earn with that versus if you keep your money in a savings account that earns an annual compounding interest at 1%. So what is the difference between a savings and a checking account, you ask? Well, the major difference is going to be with a savings account earns interest typically. Now, depending on the type of savings account you have, it may not be a lot of interest, but it is interest. And with a savings account, you can typically have unlimited deposits, but you are going to be limited to how many withdrawals you can make a month. With a checking account, you may not necessarily earn interest. However, nowadays there are a lot of different banking institutions or credit unions that do offer cash back checking in their checking accounts. So that is something to look into. But with a checking account, you can make unlimited deposits, and typically you can have unlimited withdrawals as well. So a checking account you're going to be using on an everyday basis to pull out money for your bills, just your random convenience store purchases, gas, expenses of any kind. With a savings account, typically you're going to be saving that money, and it's not meant to be used as a checking account. And a lot of financial institutions will charge you a fee if you're using your savings account as a checking account, which is something I wanted to point out because I opened my very first bank account, as I called it, when I was very little. I think like 6 or 7, my grandma and mom took me to the bank and we opened it. And so when I started working around 14 to 16, I was putting money in there every time I got paid, even though I would just use it to cash my check, leave some money there, and then go on. But typically when you turn 18, you can take your parents off your account, and or your account gets upgraded from a minor account to a regular account. And I was unaware that I had a savings account because the savings were still going to my grandmother. So I didn't see that I'm being charged to take money out. And let me not age myself here, but that was before online banking and mobile banking was super popular. Now, I do believe I covered this last week, but just in case I didn't, or you haven't checked out that video yet, please don't forget to use all your resources available to you at financial institutions. One of the big things that people use nowadays are going to be their online and or mobile banking, which is pretty much the same thing. The only difference is like one, you have to look at through your computer, or through a web browser on your phone, and the other one you can download an app and use it that way. Now, with that, that's a really good way to manage your funds, make sure you're not overspending. You can do transfers and other types of things there as well, even deposit checks most of the time there. So those are really good resources that you're going to want to make sure you're paying attention to. And typically that comes with any type of an account with a bank, but normally it's more associated with a checking account. And I am sorry about the lighting, my windows, and the sun is going down and it's doing things. Sorry, guys. Some key terms that you should know based around your checking account are going to be income, for starters, which is various jobs or work that you do, the money that you earn from that. Full or part-time employment, babysitting wages, allowances, odd jobs, and interest. Expenses are going to be bills such as rent, telephone or cell phone, and transportation as your car payment, gas, or bus fare. Also clothing, eating out, and personal items as well. Cash flow is going to be the relationship between income and expenses. Some loans that they offer are going to be credit cards, personal loans, mortgages, and home equity loans. Home equity loans are also just known as a second mortgage. Now, this week we aren't really diving into loans. That is going to be saved for next week. I just wanted you all to know a few of the loan products that banking institutions such as banks and credit unions do offer. But next week I am going to be diving into credit and different types of loans and things. So if that's something that you're interested in learning more about, please come back next week. Hi, thank you so much for watching this video. If you made it this far, I truly hope you got some value from this video. Financial literacy is something that I'm extremely passionate about. So if you did gain value from this, please let me know below in the comments. Or if there's something that you want me to delve into deeper, please let me know and I'll be more than happy to help you with that. Also, more importantly than hitting the like button or the comment button, I know views are important, especially because I am very new to this, like I'm 2 months into YouTube. But more importantly than all of that, I want people to be able to be in control of their finances and feel confident in their finances. So please, if you got value from this and you know someone who will also gain value from this, please share this video with them. It would mean the world to me to be able to help more people just take control of their finances. But thank you again for watching this video. You are a real OG if you made it this far. Thanks for rocking with me, and I'll be back next week.